Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, May the 19th. The year's 2025. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. Risk management. Always have your risk management in place so you don't lose more than you're willing to lose on any one single trade or during any one single session. So let's take a look at the weekly chart. As we can see, according to the dashboard, we still have some gaps that haven't filled. Last week, I think we had 4 or 5 gaps that didn't fill. And it looks like we're starting off this week about the same. And it looks like it's the Canadian pairs this week. Last week it was the Swiss pairs. Something to notice here about the weekly. If you look left, you can see we're in the wick zone here. And that was from last year. And you can see here from the last 1, 2, 3, 4, well, 3 out of the 4 weeks we're in it, we've exceeded last week's high, so we're out of last week's wick zone. And we broke through the opening range of the month back at 33.45. We're putting in the opening range for the week, which you can see it looks like it's about 139, 138 pips at the moment. And taking a look at that monthly chart once again, if you look to the left, you can see right where we are. A couple of wick zones. We did break out last year's high, barely. And for the year, we're 858 pips above the yearly open, 76 off the high, and 1,269 off the low. We had an inside bar 8 days ago. We are within that range. The breakout's at 33.79. In fact, we opened below the inside bar range and we've already gone through it and dropped back inside it. And we've got, on the weekly, we've got a bunch of inside bars and a handful or so on the daily and monthly. And you can see here, monthly inside bar 16 months ago, weekly inside bar 21 weeks ago. And the range is at 139. And it looks like it's the euro and pound pairs where all the range is. You can see we just have gone straight up since the open today. And we're coming out of that upper wick zone, or actually upper wick zone, sorry, the red rat zone here. Guess I'm still waking up. And so price did not hold above the 134.00. You can see we haven't had a close above it today. We've gone above it, but at least not on M15 we haven't closed above it. Maybe on the 1 minute. Pivots, Bambino flex indicator indicating short, near the pivot short, near R1 short. So far that hasn't paid off, so we're at R, just breaking below R2. So if we're short at R1, we'd be short at R2 also. And this looks like a return bar on H4. So for the daily, we've taken out the pivot. I wanted to double check something here. Yeah, we took out the pivot here during that first H4. So for the week, we missed a pivot by 4 pips. For the month, we've taken that out. Back to the week, I said we missed it by just 4 pips. In and out of the lower wick zone, in and out of the upper wick zone. We're crossing above that last week's high. So for the range so far this week, we're still in the first day, 139 pips. We've broken out at a high by 44. We have not broken out at a low, so higher high, higher low. High minus close 35, close minus low 103. And you know, the funny thing is we never really had a green rat zone. High minus open 139, open minus low 0. So be interesting to see. Earlier I was looking at some charts and I was noticing how many times the weekly open gets crisscrossed. We're putting in that high today. It looks like it could be the high for the week. We won't know till the end of the week whether or not, but could be opportunities for a weekly open crossover trade to the south side. Simple price action chart. Crisscross the previous H1 low. And once again, looking left here, you can see those lower wicks, inside bar, outside bar. M30 range for the last 5-6 bars is 10 pips or better, so there's some money to be made. Looking at the higher low, lower high chart, you can see here we had a trigger, which would have also been a flip-flop box. Which would have paid off nicely. And you can see here, kind of range bound here, like 72, 60, 63. So that's about 9 pips. It just seems to be going. Yes, sometimes it gets above or below, but you look for where the majority of the price or where the candle bodies are, and you could just look and see a defined range. And basically, you can see here between 64 and 70, price just keeps crossing that. So it's almost like sell, buy, sell, buy. There would have gone down and another buy would have been caught there. Could have ridden it out. Another signal to the north. But there was a hint right here on this one. went up, but it didn't quite make the 70, so lower high. So lower high followed by a lower low. It broke down through that 64 all the way down to 58, then came right back, almost starting to establish another range. And so we've got just a flip-flop chart. See what happens. You can see here there was a gap down. It's like, hey, guess what? This gap's like the fill, came all the way down, and guess what? It filled it. There's a flip-flop to the south just now. And so we're right around that 64 area, 65. So that would have been good for a couple of pips if you weren't too greedy. In fact, had a trader comment. They were asking about money management, so I put out some hints, but let me just suggest that you just study money management, because if you think about it, if you're asking questions about money management, no disrespect, but you shouldn't be trading. you should have a clear understanding of money management before you place your first trade. And once again, the method of entry is separate from money management, risk management. You really need to keep it separate. And I really think that's where a lot of traders, that's their downfall, because traditional trading teaching doesn't really teach that. There's a system. You put your stop loss here, you put your TP there, but that's not really money management per se. No, money management is, here's what I do with my money. I never want to lose more than a certain amount during a trade or during a session or with a certain instrument. I only want to be at risk for a certain period of time or during certain periods of time. It's got money management is so much more than the trade. And as you can see here, once again, we did that. What were we looking at earlier there? That 70 area down to 64. And see here, it failed to do it again. And it's crashed right through that 64. Okay, we usually look at that at the end of the week, range by month 264. And it was I was watching some Formula One videos. As some of you know, I like racing, and I was also watching chess, some chess videos. I used to play chess decades ago. Can't even remember the last time I played a game of chess. Anyway, they both mentioned about getting comfortable being uncomfortable. And I was thinking that's something you have to do in trading. Because sometimes, each of us react and respond differently, and sometimes things get a little uncomfortable. You have to be comfortable with that. And probably we'll explore that later this week. But the fastest 15 minutes in trading is just about over. Hope everybody had a fun and safe weekend. I'm going to wish you a profitable week of trading. And I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.